Welcome everyone to the Friday episode of the PYRESWAP Show. I'm your host Five, and of course, special thanks to our sponsor, Pocket Network. This is the first Friday that we're doing this time slot, and it's probably not exactly intuitive what we should even talk about. And I think that I'm going to just go over some of the stuff that we did over the week, kind of like a weekend review, and I think I'm going to talk about like some of the questions that have surfaced recently, including what is a Ponzi scheme, and then what is also a hedge fund, right? And a hedge fund is an investment firm where they effectively take large sums of capital, they raise large sums of capital from investor bases, and then they manage them for it. They manage their money for them. Hedge funds generally have a fee structure known as a 2 and 20. That is at least in like an industry standard. And what that means is they get 20% of a performance fee. So if a hedge fund makes 1 million for their investors, they keep 200 grand, and that is the 20, if that makes sense. And they also will just take 2% as like a flat fee. So they would also just take 20 grand once a year. Like whatever the sum of like what they're holding is, they would take 20 grand from this and whatever else they're holding. Like the largest amount, they take 2% of that, and then the performance fee is 20%. Some hedge funds have different structures. To be clear, just to answer some stuff in chat, there are crypto hedge funds out there, but like generally speaking, it almost doesn't make sense for them to have a token. Like I don't know why you would have a token for the crypto hedge fund, because when you buy a token, you're not necessarily providing capital to the hedge fund to invest on your behalf. Like it's not really clear why a hedge fund would sell a token. So Seigniorage dApps like Tomb Forks, they're not hedge funds. Yeah, that's not what they are. That's like a different type of firm, a different type of financial institution. And like a hedge fund is generally in the business of alpha and not beta. So for those of you who don't remember what alpha and beta are, this is position, portfolio, performance, and beta is instrument or asset performance. Now, generally speaking, in big boy finance, alpha and beta are actually measured against the benchmark of the industry standard. So like this is like versus the industry standard. Forgive my handwriting here at the bottom, which is probably illegible. But generally speaking, a hedge fund, unless they for some reason sell stock, so in big boy finance, in big kid finance, if you have 5% alpha, that means you are beating the standard market return rate, which is normally like 11% or so, by about 5 points. So that means that you are 16% up over the year. That's what 5 points of alpha mean. You can also be negative 5 points of alpha, in which case it means you're lagging. You're lagging against the industry standard. Now beta, you can also be looking at the industry standard about how much all things rate about how all things over the market are performing. So a certain stock like Nvidia, if it's outperforming the market average, they have many points of beta. But specifically speaking, alpha is like how the investor is doing, and beta is how the investment is doing. I want to be clear that these are not the same thing. When you look at a price chart, you're looking at beta and not alpha. The illusion when you see certain price charts describe things as being up 56 million% or something like that. I think we looked at a meme coin earlier that was up 56 million% in 27 minutes. That is kind of done to dupe investors into thinking that that type of beta could translate into alpha. But there's always other concerns like price impact and liquidity and just in general, I guess all the details that really matter. So if you were to buy the instrument of a hedge fund, or you were to buy, or if you were to buy a hedge fund with a token, you wouldn't be subscribing as an investor. Rather, if for some reason their business model that gets that 2 and 20, that 2 and 20 could in fact be revenue shared with the shareholder, possibly, if that makes sense. But in crypto, this doesn't make any fucking sense. I've seen a lot of projects like do this, and I don't think they win, kind of because they don't know what they're fucking doing. If you're doing like I've seen them do this like via a pre-sale. Like you effectively, they sell a bunch of tokens, which is a pre-sale, and what they do is they invest the money on your behalf. And quite often you'll see these projects that have trading bots. I don't want to name any names, but maybe you guys remember some projects that had trading bots as like what you were buying a token of. And it's it was fucking crazy what the type of raising that you would see these projects get, because it was almost like the more ridiculous it was, the better the raise would be. So they did like a gigantic pre-sale, and they captured a bunch of fiat, and then they failed to deliver, and then of course the token crashed because they weren't able to provide dividends. It's not really clear. It's not really clear why people think this is a good business model, but I guess these disasters are there to kind of like teach the lesson to the ignorant. I hope I'm making sense to you guys. So I don't come from hedge funds, and the fact of the matter is that I don't think hedge fund mindedness is important for beta performance. Like when you think about issuing an instrument, you need to think more about like the type of exchange that would issue, I don't know, like an option or a future or like contracts like that. Like that's really the type of stuff that you would want to put into an instrument and think about beta performance. Because if your business model is focused on alpha, that's like you're the type of, you're an apple harvester. But if your business model is focused on creating beta, you're the one that plants apple trees. So if there aren't apple trees, nobody can harvest apples in the first place. I hope I'm making sense to you guys. Okay, I'm actually talking about what a hedge fund does right now. You're definitely not wrong about user engagement being... Yeah, we don't need to necessarily go in all this. There is like an actual structure. Okay. No, No. Yeah, exactly. I'm going to diagram that for you. Okay. So I'm going to diagram that for you. Okay. So literally a hedge fund. We're going to do a hedge fund diagram. Okay. So we have the HF, and then we have the subscribers. Okay. And subscribers are the people that give. They give dollars to the hedge fund, right? So they have a subscription agreement, and basically they're just giving large money, mostly large amounts, because in order to actually be, at least in the United States, a subscriber to a hedge fund, you need to be an accredited investor. So generally these are high net worth individuals, right? So HNWIs, okay? And then here, this is basically a hedge fund. Inside this, there's a bunch of analysts and I guess you could say managers. And all analysts do is they just like research stocks all day long. They just research stocks all day long. They're looking at charts, they're reading reports, they're looking at Twitter. They're literally they're doing crazier shit than that. And they're trying to predict the market and trying to they're trying to basically get alpha, okay? Like the hedge fund is trying to, again, extract alpha from figuring out the market, which is, again, like the foot soldiers of the hedge funds are called analysts. So at any investment bank, like I think with the exception of intern, you become like a junior analyst. That's like the most entry-level position that you're actually doing a job there, right? Like if you work there in the bread and butter department, as it were. When you become an analyst, I don't actually know how this works because I never worked at a bank, but they either let you manage your own portfolio right away, or you end up justifying positions to a manager who enters and exits positions based on your analysis, right? So a hedge fund, like for instance, if we were talking about Tomb Finance, Tomb Finance would then have to be looking at the market in general, looking at Bitcoin, looking at whatever they want, and effectively trying to extract alpha on behalf of the investors. But the fact of the matter is that Tomb Finance or Ascender's protocol isn't in the business of taking subscriber money and then like managing it on their behalf. Does that make sense? And then and this would be, I guess, what, stock market? And literally, like, they just deal with this, and then they get a percentage, right, back to these people. I guess that would be the fucking diagram of a hedge fund. Does that make sense to you guys? Are you guys more or less getting it? Like, the analysts and managers, they take the money from these dollars are getting fucking distributed to them to manage. They have these large accounts that run this because they're kind of a financial institution themselves. They deal with the stock market, and they deal with the ups and downs, and they take positions, whether they're bonds, options, futures, or just regular equity, as it were. They're doing stuff there, and whatever they keep, they take a percentage and then give back to the subscribers about 80%. So whatever the hedge fund makes money in, the subscribers, who are the ones that are actually giving the capital for the hedge fund to do their job, they get 80% of the cut. So like, this is not the structure of Tomb Finance. Okay. So again, now let's say we're gonna move away from this now. I'm assuming everybody knows these diagrams now. So if we're talking about a seigniorage protocol, audio Discord cut? Okay. Okay, is my audio good again? Check, audio, no audio check? Okay. That did happen, and I Yeah, let me try that again. Here, let me drop. I'm gonna do that exactly. Could be. All right. Okay, I'm assuming you guys can hear me now. You're muted, huh? Interesting. Okay, I'm good now. Fantastic. Okay, can you guys hear me now? Fantastic. Okay, so I'm gonna assume you guys understood the diagram of the hedge fund there, more or less. That was very, very crude. I've never drawn that diagram before, but hopefully that broke through at some point. In contrast, if we were talking about a seigniorage DApp, right? You have these two things, like you have these two markets, right? And it's almost like you have a boardroom and you have share coins, share token players, and the share token players are buying and staking into the boardroom, or they're withdrawing and selling, something like this. And the boardroom is looking at this ratio, right, TWAP, and what it's doing based on whether TWAP is above peg or below peg is it's increases peg token when overvalued. That's it. The boardroom is effectively trying to get this overvalued instrument to return to its peg. It does this over time in through a system of like the epoch system and the expansion rate. But literally, like, you have these share token players that are effectively treating the share token almost as if, by the way, almost as if they're chasing the yield from that instrument. Does that make sense? Do you guys remember like how the share token would behave when they felt like the peg token was going to cross peg? Do you guys remember this? Like how the share token would just like go right up like that? It's the same concept of moneyness. Okay? So in PYRESWAP, we have something called the velvet rope pattern, which you guys might be familiar with. Sometimes doesn't always show up these days, but the velvet rope pattern comes from the idea of a volatility smile, which is price chart behavior with respect to moneyness of the derivative, meaning of the option. I know I'm probably losing everybody here. Anyways, so people would chase the share token based on the prospective future likelihood that the peg tokens would be issued to them to sell. So they would in fact capture seigniorage, moneyness. Now, the peg token being overvalued, it's only determined by an oracle in a single liquidity pair. Now, the fact of the matter is that the peg token in the standard tomb fork, in the standard tomb finance or tomb fork configuration, it doesn't have a job or a point. It doesn't do anything. It literally just waits to lose peg. And generally speaking, most of the time, when they lost peg, they wouldn't regain peg. Yeah. Does that make sense, everybody? Okay. All right. I hope that answers everyone's questions. I might make today a little shorter than we normally do. Okay, I can talk about Ponzi schemes, okay? Tomb forks had the reputation of being Ponzi schemes because, again, they literally always needed new investors to pay old investors because of this clear fucking problem. The PEG coin doesn't do anything, right? Because if the PEG token doesn't do anything, then there is no underlying value to that whole mechanism. Like the thing is a primitive. It's a primitive, but doesn't have an application. Does that make sense? It's like, okay, we built these mechanisms, but we still haven't figured out how to actually implement them into anything. Does that make sense? So, Ponzi schemes. They effectively promise little to no risk. Needs new investors to pay old investors is not inherently profitable. And do you guys understand what I mean? Like when we go back to hedge funds, the hedge fund is profitable if it's capturing alpha, if it is beating like the average market return to the point that it's able to take a fee from the returns it's getting for its subscriber base. And by the way, in finance, subscribers means the investors. It's just like a fucking, I don't know, bourgeois way of saying it. Seabiscuit, yeah. A meme coin is not complex enough to be a Ponzi scheme. A meme coin is either just gambling or a scam. Like, I don't know what to say. Like, some of them end up implementing stuff for sure. But, like, generally speaking, some meme coins like Doge, okay, if we talk about Doge and Shiba Inu, they, in theory, have, like, a chain behind them, right? Like, there's Shibarium, and Doge has Doge Chain, which I believe is a fork of Litecoin or something like that, right? As good on the base front. Okay, so the question is, aren't the tombs or the ohms as good as a meme coin basically on the base front? I think, like, as far as the fact that they're just something that you can buy and sell, like the fact that they're in liquidity, yeah, that's something in common. But I think, again, the way that they're perceived in the human mind is what makes the difference. Does that make sense? So, like, when they launched tomb forks back in the day, they would launch them with a Genesis. They didn't have a volume bot, right? They weren't, like, launching a volume bot and then, like, driving the chart up, right? Let me pull up Deck Screener. Yeah, like, they don't have anything going on. They throw together a coin and then they burn the liquidity, like, just to prove, like, that it's decentralized, something like that. Yeah, well, some of them are. So let's say we go to 24-hour gain here, and we have one here with like 5,000. It's called Big Trump, right? And let's see how old this is. Okay, this is 18 hours old, right? It's called Big T. And the fact of the matter is that like the entirety of this is that you can see that they just have bots transacting every fucking second, right? So you can see like all these bots are just like swapping and selling every fucking second. Yeah, and again, it's the tomb fork has like this peg that it's watching, and it's trying to actually control the supply of a token to kind of determine whether what is behind it is undervalued or overvalued. But it never had the thing in the background. Does that make sense? So I would say that like the tomb forks without a utility were very much Ponzi-nomical. Does that make sense? Like to me, it was always baffling that like you could just like throw together some arcade games and stuff and actually graduate out of Ponzi-nomics. But like this was apparently deaf. Like this was, most people like didn't listen to me here, which is how we kind of, went on this fucking journey. So the fact of the matter is, when I say PYRESWAP is provably not a Ponzi scheme, it's because the DEX itself collects swap fees from arbitrage bots. Does that make sense? So like literally, if you think about like how is this inherently profitable, it's because PYRESWAP is built on top of a DEX, and therefore like the DEX infrastructure is inherently profitable because it's collecting the volume in the background. Like even if that volume is just arbitrage bots, those ARB bots are bringing fees all the time. That is where the profit comes from. That is also where the profit that feeds the IWV is. Thanks, Seabiscuit. I'm just gonna be honest with you guys. Here in what may or may not be Texas, the temperature in this room is like 15 Fahrenheit higher than it is when we do the shows in the morning. So like for me, it's like I'm hating this blazer, and I'm just what would that be in? That's probably like 3 or 4 degrees difference in Celsius. It's like yeah. Yeah, thank you, Winter Horse. Yeah, thank you. You are a treasure of the community for sure. Yeah, I could take it off. I guess it wouldn't be the worst thing in the world. I'm trying to stick with a theme. Yeah, should I whip it around my head? Yeah. Okay. Anyways. Oh shit, that's a real gun that just fell off. Hang on. Okay. Yikes. All right, I'm gonna not do that because we have these live firearms on stage. Anyways, I appreciate everyone's suggestions. It is. I do feel way better all of a sudden, by the way. Yeah, don't worry. Guns won't go off when you drop them, or so they say. Anyways, okay. So literally, promises little to no risk. Like, first of all, I am not promising little to no risk with PYRESWAP. Does that make sense? Like, the risks are fucking there. Shit, we had shriveling. Remember during shriveling? Do you guys remember shriveling? And it was like, oh no, shriveling. And now we don't have shriveling, and now the price doesn't go up as quickly, right? Like we don't have decay anymore, right? This needs new investors to pay old investors. I want you guys to be clear. Winter Horse, I might just be really overheated. Keep that in mind. Yeah, I might just be way more overheated than you realize. I might be sweating because of how warm it is in this room. I don't know if you guys realize this, but even without a new investor base showing up, there's guys like what? Why So Cynical is again like playing 4 times a day. Do you guys see that? Do we need new investors to pay old investors? He is somehow making money 4 times a day. Do you guys get it? And then is not inherently profitable. Again, we have a DEX in the background. Literally, our investors today are making money, and then promises little risk. I literally have a gigantic orange warning label. Do you guys know what I mean? Promises little risk. We put this gigantic orange warning label right in the middle of fucking stake. And there's a fucking yellow pop-up. Right? Does that make sense? So when I say PYRESWAP is provably not a Ponzi scheme, I mean that it's a fucking X on all 3 of these. Do you guys get what I'm saying? Now, the fucking problem is everybody wants the tomb forks to go up back to peg, right? And in order to do that faster than we're doing now, we would need a bigger user base. In order to attract a bigger user base, we did a Genesis event, and this may or may not have been a bit anachronistic because Genesis events just don't seem to pull the crowd like they used to do, and probably because people fucked up the reputation of Genesis events. Yeah, exactly that. Well, Alessio, you remember, literally before we launched Genesis, the things were just clambering up, but again, there was only like 10 people playing at the time, right? Do you remember that, Alessio? You remember those days? Yeah. Like, it's like, well, they are going higher. Yeah, in 6 months, they're up 2,000%. Yeah. Well, Winter Horse, you know, I don't know if it's good news or bad news, but believe it or not, Genesis events, whether or not it's related to Tomb Forks at all or a new DEX, they're just not what people are tuned into anymore. Because now I think the Web3 user base, the marketing meta shifts. Does that make sense to you guys? The marketing meta shifts, meaning people look differently for their ticks, as it were, right? So, for instance, there used to be a website called Ape O'Clock, and Ape O'Clock literally stopped being a launch calendar, and it completely pivoted their business model. It's like nobody cares about the launch calendar anymore. Now everybody is just literally looking on Twitter for like tidbit information that they can act on, because the majority of projects are basically just out shouting each other on Twitter. This is where we have been weak. We had the marketing meeting earlier today, by the way. So we had the marketing meeting earlier today, intrinsically in the circus, or internally. And basically, I said that I completely overlooked and was, in fact, I wasn't putting in the right amount of effort to actually market this project because I didn't realize how dominating we need to get on Twitter. Does that make sense? Like, we need to be dominating as fuck on Twitter. Right now, we are streaming on Twitter, but like, we need to be even doing more than that, right? And What the Fork left like 2 years ago for sure. But anyways, we're gonna get very, very experimental now with marketing. We have stickers coming. We might have a billboard coming. We have we're gonna just get fucking better at it. Yeah, we're gonna literally have we're gonna have fucking 50 YouTube videos coming. Fuck it, 50 of them. And we're using fucking teamwork to make that happen. And we're going to make this product as explosive as it needs to be, because there's zero reason that we don't try to send this product as fucking high to the moon as possible as we can, like right now. Would you guys agree? Like, there's no point in trying to like keep the seatbelt on anymore. The only thing that I think is getting in our way now is the 0.7% swap fee. But, you know, hindsight is 2020. We're not changing that. We're not changing that. Not before phase 2. And we're definitely not really in phase 2 before we can really prove the fucking... You guys get what I'm saying. Anyways. So, like, a meme coin is not a Ponzi scheme because I don't think anybody feels like they're investing in anything. Does that make sense? Like, there's nothing behind it. And I don't think meme coins promise little to no risk either, right? Like, I think that meme coins have such a high-risk reputation. But you guys get what I'm saying. So that is what that is. And I think I'm going to end it here. Yeah, I think I'm going to end it here. Thank you guys so much for coming to the PYRESWAP show. For TikTok, we're not eligible yet. We're not eligible yet to go on TikTok. And we'll probably do TikTok repurposing more so than live streaming on TikTok. I hope that answers your questions. I am now going to get... Yet, again, thank you guys. I'm doing my salute. Yeah, thank you guys so much. I'm going to get off stage. Thank you guys so much for coming to the PYRESWAP show.